At People's Capital Group, we help you invest in real estate. Build your wealth by owning professionally managed apartment buildings in the northern New Jersey market. We want to show you how owning real estate is attainable, even for the busy professionals that don't have the time or experience investing in real estate. Now, we only work with select people who are serious about building wealth. So find out if you qualify at peoplescapitalgroup.com. All right, ladies and gentlemen, welcome back to the Passive Cash Flow podcast, where we help people invest in real estate. Now, some episodes include interesting guests that span dozens of different types of industries. Other episodes offer analysis of popular topics that pertain to people seeking to learn how to build passive wealth in real estate. So listen in and enjoy our off-the-cuff podcast made to entertain, educate, and help you learn how to create passive wealth in real estate. So today we have a very exciting topic. I'm going to talk about how to become an investor, right? How to become an investor. I often attract younger investors or people really just trying to get started in investing in real estate or all different types of asset classes. Since I'm a younger guy myself in my 30s, I tend to attract people in their 30s as well, looking to become an investor, or even older age groups as well, and really learning how to become an investor, why they need to be investing in assets, not just real estate, but just investing in general, and how important it is to start investing at a young age. But even if you're older and you haven't started investing yet in real estate, this will be an interesting podcast to explain how to become an investor. So why become an investor? Of course, if your money isn't working for you, then we're just not doing it right. Your money should be harder than you're working. We work too darn hard to not have our money working for us. So you need to have your chips on the table. You need to have some capital invested. Of course, you want to have your savings and 6 months of reserves there, but you also really want to be investing as aggressively as possible, especially at a young age, especially if you don't have a family yet or something like that. So you really want to focus on understanding that investor mindset, that if your money is not working, earning at least about a 10% cash on cash annualized return, then your money's not working hard enough, and you got to get that money working hard on making more money. See, money is just a tool to make more money. Capital is used to earn more capital. So invest that capital. It's so important. It's earning more capital every day and every night you're sleeping. Secondly, articulate your goals, right? What exactly do you need to retire on? How many years in the future is that? What do you want to do with your retirement? Do you want to travel? Do this and that? What are your hobbies right now? How much money do you need to do those hobbies? Maybe you want to travel now or live a lifestyle. So you got to understand, what are your investment goals? What's your timeline to get there? You want to be realistic, right? You're not going to double your money overnight. You're really not going to earn, unless you're in extremely high risk investments. Most good investors are earning around a 10 to 12% annualized cash on cash return. That means if you're investing $100, you would expect to make $10 in profit per year. That may not sound like a lot, but over time that grows and grows and grows, especially if you take those earnings and reinvest them in assets. And that's key as well. So you want to determine your investment strategy. How much money do you need to live on? You want to articulate your goals, write them down, and have a timeline for those goals. Have a date you want to achieve them by. Okay, I want to get to this amount of wealth. Well, that means I need to put away $300 a month or $1,000 a month. Okay, it depends where you want to get to. Articulate those goals, write them down, and now let's determine your investment strategy. Right? Do you want to be active? Do you want to be running around dealing with the headaches of being a landlord? Or do you want to be actively picking your stocks and picking winners and losers? Or do you want to pick more of a partially passive type of investment where maybe you're buying real estate but hiring a management company and managing the management company? That's partially passive, as you're not actually the property management company, but you're still dealing with the management company, still have to personally guarantee the mortgage and find the deal and do the due diligence. Or maybe you're picking stocks and you're kind of being more of a partially passive investor, picking mutual funds to invest in or things like that. Of course, you have a completely passive investment opportunity. That would be like investing in a real estate syndicate where capital is pooled together and the group is buying a building, ideally a mismanaged building that needs repairs. And that's a completely passive investment where you're getting monthly updates, quarterly financials, quarterly cash flow checks and a large lump sum upon the refinance. At least that's how we do it here at People's Capital Group. And that's a completely passive option. That's like investing in a real estate syndicate or maybe a mutual fund or something that's completely passive where you're going to kind of sit it and forget it, enjoy your updates, enjoy your income from the investment. But of course, you're busy doing all the other things you do, like your job and dealing with your family and all the other challenges we face in life and responsibilities we have. So investing passively may be a great option for you because you can still earn a return on that investment, a nice double-digit return, but not have to do the work behind the scenes to earn that. It also can be a safer investment to invest with professionals as well. All right, so let's move on here. You also want to get the right investing resources. So these days, that means books, blogs, YouTube videos, podcasts, courses. There's tons of them out there depending on what you're trying to learn how to do, whether it's flip houses or reposition apartment buildings or do stock investments or bonds or cryptocurrency. There's tons of opportunities to learn about what you want to invest in and educate yourself first, and then decide if that's the right asset class for you, the right investment strategy, active, semi-passive, or fully passive, right? You want to understand what's your good long-term view here, and is this a good asset class for you and good strategies? Learn about that investment strategy and use those resources to always be educating yourself and learning about new investment opportunities. Of course, identify investment opportunities as well, right? So we always want to be looking for good opportunities, talking to maybe realtors if you're looking for real estate, talking to stockbrokers if you're looking for good stock opportunities or IPOs even. So you want to identify those investment opportunities and the types of people and services that are going to bring those to you, and then team up with them or join up with them, get on their mailing list and start looking into those types of opportunities. So of course, if it's real estate you want to invest in, now real estate is a very tried and true asset class. It's made the most millionaires out of any other asset class, and boy, billionaires keep 60% of their wealth in real estate, so it's probably a good place to be. We always suggest about 50 to 30% of your capital should be invested in real estate. Tried and true, professionally managed real estate syndicates are generally the best way to go for individuals that are too busy to manage the real estate or inexperienced in looking at deals and managing them and don't have the time to deal with the headaches of being a landlord or repositioning apartment buildings. So investing in a syndicate can be a good option there. Also, buying a rental property, right? That's an active option. That means you're going to be hiring the management company or dealing with a manager and realtors and landlords and tenants. So owning a rental property is an active option, but it could be a good way to build your wealth as well, especially if you're younger and hungrier to learn things and get those experiences. Now, a higher risk but a higher reward section of real estate could be property flipping. That's buying a fixer-upper down the street, or buying a fixer-upper, hiring contractors to renovate it, and then selling the property for a profit. Now, that can be a very risky option because, of course, getting the construction done on budget is very difficult to do, especially if you don't have experience in that space. Contractors are hard to manage. And the resale value of the property can change as you're doing the renovations and getting it back on the market. And also you want to recognize you can also not analyze the property the right way or misanalyze the construction or the resale value. So if you're not experienced in real estate, property flipping probably isn't a great place to start. If you want to learn a lot very quickly and maybe lose a little money, it could be a good place to learn. So check that out if you're really active and seeking to learn how to flip homes. Crowdsourcing. So investing in crowdsourcing websites or investing in a real estate syndication is a great way to invest passively. There's all types of websites that do crowdsourcing. And of course, People's Capital Group is a real estate syndicate. And that's a great option for people looking to invest passively and team up with professionals. Financial market investments. So we have the stock market, we have mutual funds, we have ETFs, exchange traded funds. So how do all these things differ? Well, the best way to get invested with stocks is starting with companies you're familiar with, that you believe in, that maybe you use their products as well, and they're good, Fortune 500 or blue chip stocks. That's a good place to generally start with the stock market. Mutual funds can also be great. That's a nice way to diversify over a number of industries or a number of businesses. So instead of owning one specific stock, you can own a mutual fund and be diversified over many stocks in many different industries, and that can be very smart as well. And of course, you have ETFs, exchange traded funds. EFTs, exchange fund traded funds. So is a basket of investments such as stocks and bonds offering diversification benefits to investors. So unlike a mutual fund, an exchange traded fund can be traded on the stock exchange in the same way that regular stocks can. So could be a good opportunity as well there to invest in those. So also we want to build good investing habits. All right, it's all about having good habits, investing consistently over time. And here's how we build good investment habits. So first, as I was saying earlier, you want to create a plan with steps, write them down with dates you want to achieve them by and why that plan is in place, and then follow that plan, actually execute it. And if there's a flaw in that plan, change it and follow the updated plan. Prioritize value, right? You want to focus on safe, strong investments. Don't have a short-term mindset. Don't be greedy. Don't try to double your money overnight. I've been guilty of that also in crypto, trying to get too aggressive there, and I lost money doing that. So you want to prioritize value, understand what you're investing in, and not be too greedy, and really have a long-term mindset, right? That's so important here. So a good investing habit is to have a long-term mindset, not looking at today or tomorrow, even next year. Look 5, 10, 15, 20 years down the road. Good investors like Warren Buffett think about, okay, where's this property or where's this value of this asset or the stock, this company? Where's it going to be in 20 years, right? Where's it going to be in 5 years? Where's it going to be in 10 years? That's what Warren Buffett looks at. Smart investors look at long-term value. They think long-term as well. They invest for the long term. They're not really get out type of day traders. In fact, most day traders don't actually make very good profits. So you want to allocate your assets as well. You want to diversify. And the more you're diversified, the more you create your plan and stick to it and prioritize value and think long term, execute these habits, you're going to create value over time and ultimately become very wealthy and a very successful investor. But it all starts with investing in the right professionals. If you're not experienced in real estate, try a real estate syndication, invest with those professionals. Maybe People's Capital Group is a good fit for you, maybe not. But go check out real estate syndications, figure out one that aligns with your values and your goals and that you like working with, and you trust them and you feel like they're a good investment goal. You're going to help you achieve your investment goals, and team up with that real estate syndication. Or look into the stock market, teaming up with financial advisors there and investing wisely. Whatever it is, you want to diversify, probably have half of your investment in the stock market, half in real estate. It's very important to be diversified and put those chips on the table. Invest. Don't just put it all into one thing and not do your research. Make sure you're investing wisely in a tried and true asset like apartment buildings or mutual funds, and make sure you're investing for the long run. But if you're doing that wisely and you're doing that consistently, you will create wealth, you will become a successful investor, and over time you can own all different types of properties, all different types of assets, and be very proud of your investment goals that you've achieved, and of course enjoy that wealth with your family, go on vacation, buy that home you always wanted to have, and live the lifestyle we all dream. That's the American dream. Work hard, invest that capital wisely, be in the marketplace, period. Be in the marketplace, be invested, and you will grow wealth if you're invested wisely. And by the way, check out real estate syndications. They're a pretty good way to go if you're a busy person with a full-time job. So that's it from here, the People's Capital Group. I'm Aaron Fragnito, co-owner of People's Capital Group, and this is the Passive Cash Flow Podcast. Check us out for weekly episodes. We also have on our website, peoplescapitalgroup.com, we have all types of webinars. We have weekly blogs. We have weekly podcast episodes, and even events in our office in New Jersey from time to time as well. So if you're local, come check us out there, and check us out at peoplescapitalgroup.com. Thanks a lot. Have a good day.